The year 2021 saw a financial event that captivated the world: the GameStop short squeeze. Retail investors coordinating on online forums began buying up GameStop stock. Their goal? To drive up the price and challenge Wall Street hedge funds that had bet against the company. As the buying frenzy intensified, a chain reaction occurred. Hedge funds, caught in a short squeeze, were forced to buy back the stock to cover their losses. This buying further fueled the price surge, creating a feedback loop that sent GameStop's value soaring. The GameStop saga demonstrated the power of collective action and the dynamics of supply and demand in a highly interconnected market. Bitcoin, the world's first cryptocurrency, shares some intriguing parallels with the GameStop phenomenon, particularly in its potential for exponential value growth. However, unlike GameStop, Bitcoin's foundation rests on a fundamentally different set of principles. At its core, Bitcoin is designed around the concept of digital scarcity. There will only ever be 21 million Bitcoins in existence. This finite supply is encoded in Bitcoin's underlying software, making it immune to manipulation or inflation. This scarcity, combined with Bitcoin's decentralized nature, creates a compelling proposition in a world grappling with inflationary pressures and centralized control over money. Just as retail investors drove demand for GameStop, Bitcoin is experiencing a surge in demand from a diverse range of participants. Individuals are increasingly turning to Bitcoin as a hedge against inflation and a store of value. Institutions, including hedge funds and asset management companies, are recognizing Bitcoin's potential and adding it to their portfolios. Even governments like El Salvador are exploring Bitcoin's use as legal tender. This growing demand, coupled with Bitcoin's limited supply, creates the conditions for significant price appreciation. The GameStop short squeeze was fueled by a limited supply of shares available for trading. Short sellers had bet on the price going down, but when they were forced to buy back shares to cover their losses, they found themselves competing for a shrinking pool of available stock. Bitcoin operates on a similar principle, but with one crucial difference: its supply is absolutely fixed. No government, institution, or individual can create more Bitcoin than the predetermined limit. This unwavering scarcity sets Bitcoin apart from traditional assets and creates a powerful dynamic in the face of rising demand. Section 5. The network effect. Bitcoin's self-reinforcing growth. Bitcoin's value is further enhanced by what is known as the network effect. As more people use Bitcoin, the network becomes more valuable and robust. This in turn attracts more users, creating a self-reinforcing cycle of growth. Think of it like a social media platform. The more people join and participate, the more valuable the platform becomes to everyone. Bitcoin's network effect is a key driver of its long-term growth potential. Section 6. Beyond the squeeze, Bitcoin's lasting impact. The GameStop short squeeze was a dramatic but ultimately temporary event. Bitcoin's impact on the financial world, however, is likely to be far more enduring. Its decentralized nature, fixed supply, and growing network effects challenge the traditional notions of money and finance. Bitcoin is not just a speculative asset. It represents a fundamental shift in how we think about and interact with value. Section 7. Bitcoin's potential. A global gamma squeeze. Could Bitcoin experience a gamma squeeze like GameStop? The possibility is real. As more institutions and individuals enter the Bitcoin market, the demand for a limited asset could trigger a rapid price surge. Imagine a scenario where a large pension fund decides to allocate a portion of its portfolio to Bitcoin. This significant influx of capital, chasing a fixed supply, could ignite a buying frenzy, potentially leading to a gamma squeeze scenario. The fixed supply of Bitcoin acts as a bottleneck, amplifying any surge in demand. Section 8. Risks and considerations. Navigating Bitcoin's volatility. While Bitcoin's potential is undeniable, it's crucial to acknowledge the risks involved. Bitcoin is known for its price volatility. Regulatory uncertainty and the potential for market manipulation are also factors to consider. Investing in Bitcoin requires careful consideration, risk management, and a long-term perspective. Section 9. Conclusion: Bitcoin's unique position in a changing world. The GameStop Gamma Squeeze, while rooted in the dynamics of traditional finance, offers a valuable analogy for understanding Bitcoin's potential. Bitcoin's fixed supply, growing demand, and network effects create the conditions for significant price appreciation. As the world grapples with inflation, centralized control, and the limitations of traditional finance, Bitcoin offers a compelling alternative. While risks remain, Bitcoin's unique characteristics position it at the forefront of a global financial revolution.